Welcome to Be the Boss of Your Money. Hey, how are you today? I'm Mitch Goldberg. So nice to see you. Thank you very much for joining me. You're watching my live stream all about personal finance, investing, and so many other subtopics that fall underneath those big topics. This is where we get into things like the stock market, investing, and helping you understand what's going on in the world as far as finances go, the stock market, the economy, the Federal Reserve, central banks around the world. We get into all of it, but I break it down for you. And I pride myself in doing this in a way that relates to everybody. So I try to take out the jargon and put in the plain speak because I want to communicate with you. This is for you, okay? Be the boss of your money is important because it's very easy for your money to become the boss of you. Today's big stories is more good news on the economic opening front, some news from the CDC. But I think one of the biggest stories of the day is Dogecoin. Dogecoin got smacked pretty hard. As a matter of fact, there are a lot of people underwater right now asking themselves, what the hell was I thinking when I bought this? Okay, so we're going to roll the quick intro. We've got a lot of good things to go into. We're going to make this short and sweet. It's Thursday. The day flew by. It's almost a weekend, for crying out loud. Wow, it went by fast. Here goes. Welcome to Be the Boss of Your Money. This is my live stream all about personal finance. So we get into things here. While you're watching this, if you have any questions that you want to ask about investing, the stock market, personal finance, certainly the topics that we're talking about today, definitely let me know. I love hearing from you. It's the best part of this whole show. I love hearing from you and I love getting into the banter with you. So go ahead and hit me up. If you're watching this in the live stream, welcome to you as well. Obviously, you're watching this in live stream if you're watching now. If you're watching this, I mean, in the replay, ask me questions as well. I'll certainly see the questions. I'll get back to you. So just go ahead and ask as if you were watching this in the live stream. Words of wisdom, words of encouragement are always appreciated. Say hi. Let me know where you're watching from. I love that stuff. This is a lot of fun. So your time is valuable. I appreciate you joining me. We've got a couple of things to talk about. We've got some crypto, stocks. The market's been heading south for about a week, and it really seemed like it crescendoed yesterday with the Dow Jones Industrial Average being down 680 points. Markets, the major averages across the board have been smacked pretty hard. Even so, the Dow and the S&P are off thus far about 2% in the week. NASDAQ is off about 4% in the week. And that's why I keep saying, if you just look at the major averages, which are still pretty close to their all-time highs. You have to keep in mind 500, 600, 700 points in the Dow is not what it used to be. It still gets my attention, don't get me wrong. But this isn't the olden days where like, oh, the Dow went down 200 points. It's a big deal, okay? But it hides the carnage in stocks that are breaking down underneath the S&P 500. So a lot of stocks that are very popular that are not part of the S&P 500 have been really coming down. A lot of people don't see it, and I think a lot of people have this false sense of security about what's going on. And I think yesterday woke a lot of people up out of a little bit of a slumber. Do we trust this rally? We'll get into it. I trust parts of it. The problem is the parts of the rally that I trust means more and more money is just going to go into the same super mega cap largest companies because that's where people feel safe. Luckily, those are the companies that are showing incredible earnings and revenue growth. So we have to talk about that. So we're going to get into it. We start the show always with a share screen, and I show you how the major averages did, but I put in some perspective, like, what happened, why. Ultimately, you have to feel comfortable with your investments so you could stick with them. My ultimate goal with any client is to get them to the highest level of risk that they could tolerate. Let me explain that. I'm not saying I'm trying to get all my clients to take too much risk or more risk than they should. I'm trying to work to the highest level of risk that's suitable for them, that they could tolerate, that they could handle, so that they don't panic out, bail out of the market at a bad time, and then miss the next rally, the next recovery. That's really what I'm trying to do. And I'm going to show you something about Dogecoin. If you want to see my video, that I'm either going to post it later on social media and YouTube or tomorrow morning, but I actually think it's like too good to wait till tomorrow. I know it's my video, but it's really timely. It's about Elon Musk and Dogecoin and a little bit of a rant. So let's take a look at the major averages and how things look today. Okay. And again, I love it that you're out there, Josh. Good to see you. So if you give me a reaction, I'll see you out there, and I always enjoy that. And I know Josh is out there. I've got Robert Waxman out there. Thank you for joining me. We got a little advertisement, I guess, here for Robert Waxman. We'll get into that in a moment. And Josh is out there, so great to see you guys. Let's do the quick share screen. I'm going to put myself up in the corner. Here I am. Hey, up here. All right, so nice rebound. The markets were higher earlier in the day, and I'm not really trusting the rebound, and I'll tell you why. I don't like big up days after a sell-off. And you might be thinking, well, why would you want that? Because if you have like a rally of like today's not a huge rally, it's a nice size rally, but it makes a nice sandwich. Okay, it's a nice rally, but they get repealed pretty quickly because the damage has been done in stocks. Technical levels have been breached. Investors are going to be taking a look at where their accounts are, what their accounts are worth. And some people are going to get scared and sell some more. And some people are going to think, and maybe rightfully so, look, I wouldn't be surprised if the market has a little more downside. I still think a lot of stocks are wildly overvalued. You know what happened? Apple and Microsoft hit $2 trillion market caps. So if they're $2 trillion, and you have to take a look at a $50 billion company and say, well, maybe they should be worth $200 billion now, because you have to reevaluate the whole value curve. What helps with that is interest rates when they're low, which they're starting to go up. If you haven't noticed, they didn't go up today, went down a smidge today. Okay. But Dow is up 433 points, up 1.29%. NASDAQ up almost 95 points. S&P up 1.2%. Okay. Gold up a tad bit. Oil got smacked a little bit, but oil's been on a pretty good tear lately. One of the reasons oil started to go up, of course, is because of news about the Colonial Pipeline. We might not be able to get gas, but now the pipeline is flowing. It'll take a couple of days, but the gas stations will be restocked. How is it by you where you are? Have you seen any lines? Have you seen any crazy lines forming where you are to get gas? I could tell you where I live on Long Island, no problem. There were no lines at the gas stations. I just drove in yesterday, filled up my car. I was the only car there. I asked the attendant, Jasmine is his name. I've known him for like 20 years. He's been there. We're kind of like friendly now, and he's a good guy. And he said, no, just you wouldn't notice anything is wrong in the world. Okay. But it's man on the ground, right? That's what you want to ask. So let's get down here to the VIX. The VIX came down 4.46 points. The VIX exploded from about 16, 17 to about 27. And the line in the sand for the VIX is 20. So the VIX is the fear gauge. When professional investors, I'm talking, the hedge funds of the world, the big money managers, when they're nervous, they buy derivative securities, options and the like to hedge their portfolio. And when they start buying these derivatives, they go up in price, which makes the VIX go up in price. So the VIX basically tracks derivatives that money managers would use to hedge their portfolio. So when the VIX goes up, it means money managers are buying derivatives to hedge their portfolios from downside. In a way, that's bullish, because I'd rather money managers hedge their portfolios with derivatives than just blow out of every stock they have, right? But today things calm down pretty quickly, and we need to see the VIX get back to under 20 to resume the rally that we were in. If we don't get back to under 20 pretty soon, then I think you have more downside. And I said right in the show, we go above 20 on the VIX. It's 23.13. Wait, you can't see that. Hold on. See, it's 23.13 over here. Okay, here I am. You see that? 23.13. I don't know if you could see that on your little screen there. But if that doesn't, I said if it goes above 20, we're hitting the downside pretty hard. And it's exactly what happened. Let's get into crypto. Okay, so Bitcoin was down almost 10% today. So really tough day, and it's down to 49,000. And let's go into, I want to look at Litecoin. I want to look at Doge. The Doge, okay, down 14%, down to 40 cents. Okay, when it was about 65, 67 cents. All right. So yeah, 67 cents. All right, right on the money. So you see this line over here? I know this gray box keeps popping up, but you see the red dotted line, and you see this little peak over here? Okay, right where the line is? If Doge goes below that, then the next support level is this little peak over here, this little bottom over here. And if it goes below that, I don't see anything holding it up. That's not a prediction. We have to see how it trades. But I don't like what Elon Musk did. And this is a little bit of a beef of mine. When somebody famous with a lot of clout gets into the market and touts a thinly traded, totally speculative investment, people go nuts for it, and he caused a rally. Now, I know he didn't put a gun against anybody's head, and he didn't say to somebody, you have to go buy it, but he has influence. And when you talk about this, I know as a financial advisor, a licensed advisor, I don't give recommendations loosely, especially on a public forum like a live stream. I'll tell you why. Because the reasoning is that you might not have the sophistication or the resources to accept the risks of what I'm recommending. That's what I say. If you want recommendations, you're welcome to give me a call. 631-920-6622 is my number. I'll repeat that if you want. And that is what I'm getting into. Let's look at some of the comments out there. All right, Joshua, sell your stock if you've invested in masks. LOL. Yes, I think at this point, if you're ramped up to make masks and that's your business, you're probably at the tail end of your business, and it's time to shift back to, I don't know, back to something else. Okay. Yes. Good point. And Robert is out there. Custom printed t-shirts, hoodies, embroidery, promo products. Thanks for sharing. You are very welcome, sir. Thank you for joining me. My pleasure. Thank you. You are a gentleman. And big lines for gas. Yes. Big line in Maryland at Costco. I love Costco. I'm like a Costco connoisseur. Like I know it's coming around the runway, and I get my steak there. Yeah. So big lines at Costco, Maryland. Yeah. From what I understand, Robert, first Georgia got hit, then North Carolina, and then it started to the shortage of gas started to move up to Maryland, a little bit of Pennsylvania, and Jersey. All right. We finished out with t-shirts. Okay. I appreciate that. Okay. Thank you very much. So yeah, it's just so weird. This is nothing like the 70s. I mean, I'm only 53. So I was very young when we had the Arab oil embargo in like 74. But I remember it. I remember my brother and I sitting in the back seat of our parents' car while we were online for such a long time to get gas for the car. And at the time, there were huge cars. You probably got like 9 miles to the gallon or something, Yeah, I was printing lots of masks, but now back to my t-shirts. Okay, I'm happy to hear that. That's like anecdotal evidence that the economy is reopening. Thank you very much. By the way, folks, while you're watching this, give it a thumbs up or whatever. It's just I like to see that. Then I see who's out there. And Stuart is out there. Greetings from Scotland. I'm not going to do my Scottish accent because I'll insult you. Stuart, by the way, Stuart, a pleasure, an absolute pleasure to become Facebook friends with you. So I appreciate you reaching out. Stuart and I are both very active users of the streaming service called StreamYard. That's what I'm coming to you on now. So let's get back to a couple of things, okay? On the screen, let me put myself back up here. All right. All right. So let's move on a little bit. Take a look at the meme stocks. I know you see the red down 65 cents, but if you could see this over here, all right, GameStop was up almost $20 a share, up 13%. All right, you see this over here, AMC up almost 24%, and COS, I still don't know what the heck they do, but it's considered a meme stock. It's up 12%. So the really speculative stuff had a bounce, but if you look at this red line in green, that's the high. That's where it is now. And that's the old, that's like the profit that's left in the stock after the big boom. Not a whole hell of a lot. It's hard to believe people are paying close to $500 for GameStop. Well, let's get out of that. Take a look at the FANG stocks. Nice rebound. When I look at these stocks, these stocks don't appear to me like they were hit. Yeah, they're off a little bit from their highs, but they also had a big rally before last week. So Apple up almost 2%, Microsoft up almost 2%, Google up 1.3%, Facebook was up a little, Netflix was up a little, Amazon was up a little bit. I mean, if you follow these stocks on a day-to-day basis, like I do, you look at them and you say, they're just kind of bouncing around in a very tight trading range. But when they all go up, that usually helps the rest of the market because they're such large companies, okay? Big news, CDC says fully vaccinated people don't need to wear face masks indoors or outdoors in most settings in the United States. You still have to wear a mask in an airplane. All right. Thank you for the thumbs up there, Stuart. Thank you very much. Hey, since Stuart and Josh gave me the thumbs up, I've got to give you guys an applause. You ready? All right. Thank you. Thank you very much. Thank you. Thank you very much. Yeah. So you can go out, do a lot more, and 12 to 15-year-olds are allowed to get their Pfizer vaccine. How do I feel about that? I feel fine about that because, I'm getting my son the vaccine, taking him for his vaccine tomorrow. So obviously I feel very comfortable with that. I don't know if you know this or not, but for those of you who are new to the show, my wife is going through ovarian cancer, and she has now had 7 chemotherapy treatments, and it's been brutal, and it just destroys your immune system. So we're being like really extra careful. Like right now, I'm working from home. I'm broadcasting from home. I'm actually in the den in my house. This is a real brick wall. It's actually called my fireplace. So we're being, super careful. But I've been vaccinated with my second shot already for 2 months. My wife got her first shot, almost her second shot. She got her second shot almost 2 weeks ago. My daughter's vaccinated. My oldest son's vaccinated, and my youngest son will be vaccinated. And we'll have a little bit more freedom of movement. And I'm looking, I'm looking forward very much to that. Disney misses on subscriber expectations. Parks revenue still hurt by the COVID restrictions. I'm not sweating this. Okay, you see this? Disney is down a little bit over $6, but the stock has rallied huge in the last year. It's still up like 85% in the last 12 months. And the fact that it's still in the 170s to me is fine. Subscribership growth missed a little bit. Revenues missed a little bit. Earnings crushed it though. Look, it's not going to be perfect, but they have to get their parks open, and that accounts for, before the pandemic, that theme parks were accounting for about 30% of their revenue. So they'll bring that back, and with the vaccines, we should get to those soon. Thank you very much, Josh. We hope your wife feels better soon. Thank you very much. She's doing a lot better. She had her latest chemo was yesterday, and typically it's a very funny thing. She feels fine for about the first 18 to 24 hours. And then, like that, it just crushes you and you're down and out for about 6 days. She could barely get out of bed. And then you start to come out of it. And then they give you another zap. But she's got one more. And then we're done with treatment. She did great with the surgery. And fortunately, the chemo worked incredibly well on her cancer. It really just it worked remarkably well for her. So she is incredibly lucky. All right. So that's the scoop from here. Do I trust the rally that we had today? If you're somebody who's a long-term investor and you wanted to put some cash into the market, there's nothing wrong with doing it yesterday or today. You can't go crazy over, oh, the Dow is up today a couple hundred points. I missed it. You didn't miss anything. If that's all you're looking for, trust me, you're making a mistake. There's nothing wrong with in the future we'll do better than this. But for someone who's thinking about taking their money out of the market, who's worried about the market, I wouldn't be surprised if we get some more downsize. We've had a pretty big earthquake and got to let the tremors come out and then things calm down a little bit. But one of the things I really want to talk to you before I go is Elon Musk and Dogecoin. Now, I have a thing with this. When someone tweets to millions of followers, tens of millions of followers, and goes on TV and other media to say, hey, Dogecoin and Bitcoin, and it's, he pumps it up. When he said we're buying $1.5 billion worth of Bitcoin, Bitcoin took off. When he mentioned Dogecoin took off. So I want to show you a video that I am going to either post tonight or tomorrow. It's so darn timely. I think I'm going to post it right after the show. But let's see if I could find it. And just take a look at this for me, okay? Here we go. I'm going to play this video for you right now. Here we go. When you see very famous, well-known people like Elon Musk, for example, I think he's a superstar. But when he touts something like a Dogecoin, you don't know who's listening. You don't know the risk tolerance of the people who are listening to you. And somebody might do something that's way too risky for them, for their risk tolerance. Now, I know what you're saying. Well, these are adults. They could make their own decision if they want to buy or sell a speculative thing. I don't even know if you want to call Dogecoin an investment, because there's nothing about it that makes it an investment. The only thing that's attractive about it is it's going up. So other people see it going up. So the other people see it going up. They want in on that action. So they buy it. There's something called the greater fool theory, which means it's just selling something to the next person who thinks it'll go higher because they think they could sell to the next person because they think it's going higher. That's what makes it so speculative until you get to that last marginal dollar and then somebody doesn't want to buy it and all of a sudden it goes back down. What makes something an investment? If it has utility, if it generates cash flow, if it solves a problem for consumers, that's what an investment is all about. Okay, here we go. We're back. Yeah. So that's my rant on this stuff. You got to be careful. Obviously you have to be careful, but sometimes I had a little bit of a Facebook debate. Don't get me wrong. I'm not one of these. I'm going to call, like I said, I'm not one of these wackos who gets into like political fights on Facebook. I'm on Facebook for fun. And because originally I got onto it to see my college friends and high school friends and see what they're up to and how their lives are and pictures of their kids and their pets. And, it's grown a lot and I really enjoy it. But a friend of mine posted something where he said, will any financial advisor please explain to me something like why they hate crypto, or because he said crypto is less volatile and performs better than blue chip stocks. And I gave him the data and I'm like, in what time frame? Because the Dow was created in 1896. The S&P became the S&P 500 in 1957. Before that, it was 250 stocks. And the NASDAQ was created in 1971. So I'm like, yeah, there was a 90-day period in the year 2020 when crypto outperformed the S&P 500 when Bitcoin outperformed, not just cryptos in general, specifically Bitcoin. And yeah, it outperformed for 90 days with less volatility, but that's a really short time frame, a short sample to look at. And what I replied was, not only is that a short sample to look at, but it's not true. I mean, crypto, Bitcoin, all of them are generally way more volatile. But over the short term, it is possible to have an investment that outperforms stocks with lower volatility over shorter periods of time. But over longer periods of time, better performing assets have always been accompanied with more volatility. Don't make the mistake of thinking just because something has a lot more volatility that you're going to make money on it over the long term. That's some investments are so speculative, we just have no idea. And that's what I think about Dogecoin, in my opinion, just because it's like, there's nothing to it. It was started as a joke. And I really think the joke is on the people who are going to get left holding the bag. Okay, so that's it. That's my story. I will be back Monday. I send a blast email out every Friday. So if you want to partake in that, you could hit me up with a DM with your email address. Okay, I'm on YouTube, Client First Strategy. Please follow me there. Subscribe. That's where I post all of my live stream highlights. They're typically 1 minute to 2 minute videos, and you could watch a whole bunch of them and learn a lot in short, snackable videos. I'm on Instagram at InstaMitchG. I'm on Twitter at Mitch_Goldberg. Facebook, I have a business name, Client First Strategy. LinkedIn, Mitchell Goldberg. I would be remiss if I didn't thank my editor, Natalie Cantwell. Thank you so much for doing such an amazing job. And that's about it. So if you want that email, hit me up with your email address in the comments, or DM me with your email address, and I'll get you on the list. All right, guys, have a great weekend. I'll see you Monday.